I have a mission on this YouTube channel, and that is to simplify trading for every beginner that really wants to master trading. All right, I'm not talking about those that just want to make money from trading or those that just want to get rich quick. No, I'm talking about those that really want it bad and they are ready to sacrifice their time to master trading and wait to get profitable. All right, that's those I'm talking about, and I'm ready to simplify trading in a way that even a 5-year-old can understand. All right, so all you will do for me is just to give me your time, give me your focus, and see what I'm about to explain, so you can be able to analyze your charts, wake up in the morning, analyze your chart, and just know what next to do in the trade. All right, because you can't predict the market. All we can do is just to react to the market. All right, so stay with me as I take you on the thought process on how I entered for this beautiful trade just yesterday. All right, I took this trade just yesterday and I said I'm going to make a video about it to show you how I entered for the trade, so you know how to enter for your own trade and be profitable. All right, so this is the trade at this place, but I'm going to clear the chart and reanalyze everything. All right, so at this point, give me a few minutes or even some few seconds, yeah, to reanalyze something here. All right, now we all know that the smart money are now manipulating change of character. All right, I've talked about that before. And if you can pay a close attention on what is happening at the market now, you see that the smart money are now manipulating change of character. So you must look out for a change of character at a point of interest. All right, don't just look out for a change of character at the middle of nowhere. Look out for a change of character at a point of interest. All right, so right at this point, when I looked at the market, I saw that the market is bearish. All right, at this point, the market is bearish right here. So there's a break of structure at this point. There's a break of structure at this point. So when you have a break of structure, you are expecting price to pull back. All right, all this place price refused to pull back. All this place price refused to pull back until price got to this point. All right, I was monitoring the price, monitoring the market, and here there was another break of structure to the downside. And after this break of structure, after we had this break of structure, there's a shift of structure here, which people do call change of character or change in the state of delivery, whatever you want to call it. This is a shift of structure right here at this point. So shift of structure, price pulled back to this point, and a break of structure also right here. A break of structure right here. Can you see that? All right, so this was what happened at this point. This was what I did when I saw this break of structure to the upside. All right, let me zoom in so you can see this properly. All right, so at this point, break of structure to the upside. Remember, as price is breaking structure to the upside, we are having our higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, because this high is higher than this high. If you can see that clearly, this high is higher than this high, higher high, higher low, and our last higher high at this point. All right, so this is our last higher low, and now we are having a shift of structure again. Price is changing character at this point again. Right here, price is changing character right here also. So I saw this change of character and I was waiting for a pullback. All right, price pulled back at this point. If you can also take out your premium and discounts, yeah, price got to our premium. All right, price got to our premium, but I don't want to enter immediately because price can continue going up from here. You never ever want to predict the market. You just want to react to what the market is giving you. All right, so I did not enter immediately because I saw that when price was pulling back to our premium, it was giving us a higher high, a higher low, a higher high. So this is not, yeah, this is a higher high because somewhere like here, this high is higher than this high right here. You can see that. So this is considered as a higher high. Can you see that? So this is a higher high, higher low, and a higher high at this point. All right, so I did not enter immediately when I saw this bearish candlestick because there is a low here, right? There's a higher low here. So I waited for a break of structure or a shift of structure, whatever you want to call it. I think, yeah, a shift of structure. I waited for a shift of structure because I know if I can get that shift of structure, then the bears has entered into the market, definitely. All right, so at this point, let me take out this premium and discounts so the chart will not be so messy. So right here, there's a shift of structure at this point. Right here, at this low here, the shift of structure right here. Price even shifted structure to this point. So you see that this bearishness is real. All right, it's real. It's not a fake one. You can see price even shifted structure to even this external higher low at this point. So you see the bears has entered into the market, so this is like a good confirmation. All right, so at this point I waited carefully till when price retraced to my discount. Also after that shift of structure, price retraced to my discount at this point. Let me take that out, premium and discount, sorry, to my premium I mean to say. All right, price retraced to my premium at this point. So I entered for the trade immediately. Let me take this out. I entered for the trade immediately. I saw this like this mini shift of structure at this point. I don't know if you can see this. If you go down to the lower time frame, see that there's a shift of structure right here. Right here, there's a shift of structure at this point. Can you see that? At that point, there's a shift of structure right there. Because price was like pulling back and giving us a higher high, higher low, a higher high, a higher low, and a higher high, and a higher low, and a higher high on the 5-minute time frame. All right, on the 5-minute time frame. So this is a shift of structure right here, shift of structure at this point. And price shifted structure and pulled back at this point. You can see like this tiny wick piercing above this point. All right, price, this is like a retracement on the lower time frame. All right, so I entered for the trade immediately. I saw this engulfing candlestick piercing below. I entered for the trade right here. Right here. I know I didn't enter for the trade so quick, but I needed to be sure. Right, I needed to be sure about what I'm doing in the market, so I won't make mistake in entering a wrong trade. Right, I waited for price to give me what I wanted, all right, what I'm expecting in the market. But if price did not give me that, then I won't trade. That is just how I trade. I have my principles, I have my rules that I follow every morning. All right, I go through the rules before I entered into the market, before I approach the market. All right, that is what like a trader should have. All right, like a trader should have what he or she looks out for when he approaches the market. Because if you don't have what you are looking for in the market, you get stopped out. You just be looking at the market and not expecting anything because you have no idea. All right, you have no rules, you have no guidelines. You just be losing trade and winning little. You lose big and you win little. So that's the problem. So you need to have rules and guidelines, all right, that you follow anytime you're looking at the charts. All right, so here is it. This is how I entered for this trade, and you can see it played out perfectly well. All right, so I placed my take profit at this demand zone right here, or you can call it like a mini order block. You can also call it an order block right here. It's like another block at this point. So I placed my take profit at this point and my stop loss above that high. All right, you can also put your stop loss right here, but I decided to put it there because I don't want to be greedy. All right, I don't want to be greedy. You can also put your stop loss right here because price has already pulled back on the lower time frame. All right, you can also put your stop loss here, but this was where I placed my stop loss right here, and as you can see, it played out perfectly well. All right, so let me show you another trade that I entered. Right here is like an opposite of the second trade. All right, this is like an opposite of the second trade, just exactly how I entered for the second trade. All right, as you can see, the trade has already played out. Let me take out all these things also and show you how I analyze the chart before I entered for the trade. All right, all right. I hope you are getting something. All right, you can still take down some pen or take some note and jot down something. All right, so you can be able to practice this and backtest this later. All right. So at this point, I saw the same thing. Price is also, the market is also bearish at this point. The market is also bearish, as well as giving us a lower low, our lower low, lower low, lower high, lower low, lower high, lower low, lower high at this point, because this low is not piercing below this low, so this is not considered as a lower high. So this is the lower high. All right, you need to see at least a candlestick closing below before it is considered as a lower low. All right, so this is the last lower low, this is the lower high at this point, until the price broke past this low. Then you can say we now have another lower low right here. There's a break of structure to the downside at this point. There's a break of structure to the downside at this point. So this is now our next lower low. All right, so right now, after the break of structure, there's a pullback at this point. So as price is pulling back right here, it's giving us a higher high, a higher low, a higher high, a higher low, and a higher high. Let me zoom in so you can see this properly. And a higher high at this point. So here there's a shift of structure right here. There's a shift of structure to the downside, or you can say change of character to the downside right here. All right, so there's a change of character here, and I was waiting for a pullback. While I was waiting for a pullback, I saw something. All right, I saw something right here. When price was pulling back, a lot of people would take this as a break of structure, but I saw that price was just trying to sweep liquidity above this point. All right, above this point. So if you go down now, if you go up, not down, if you go up to the higher time frame, you see that what we have here is our lower high. All right, price gave us a lower low at this point, a lower high, and our last lower low right down here. All right, price has not gave us another lower high. I don't know if you're understanding me. Let me explain this better. Price has not give us another lower high because this low here refused to break past this low. So this is not a lower high. This is not a lower high because this low refused to break past this low. If this low is breaking past this low, then this is considered as a lower high at this point. So this is not a lower high right here, meaning this is not a break of structure to the upside. This does not mean that price is going to turn bullish. All right, price is still facilitating the pullback. Sorry about that. Price is still facilitating the pullback. All right, because price has not broke past this point right here, this high at this point. Price has not broke past it right here. This is just a candle wick piercing above. All right, this is not a break of structure to the upside, so don't consider this as a break of structure. All right, so when I saw this at this point, I know that price was just going to pull back to facilitate, just to pull back a little bit to facilitate the pullback. Yeah, at this point. So that was why we have this shift of structure at this point, and price pulled back again, and we have another break of structure right here. We have another break of structure right here. We had another break of structure right here. So this is a break of structure. Remember, we are still in a downtrend. All right, price has not turned bullish yet. If price has turned bullish, then you need to see this candlestick piercing above this our last lower high at this point, piercing above it. Then we wait for a pullback, then we can trade the continuation. All right, I don't know what's wrong with me, man. I'm just stuttering. What's wrong with me, man? So right here, Like I said, if this is a change of character on the higher time frame, you will see something like this. You will see something like this, price piercing above it clearly with a lot of liquidity. Then you wait for that pullback before you can continue trading the uptrend. All right, so that's just it. I hope you're understanding something. So I didn't get that, so I knew that price is still bearish. Price has not shifted structure yet. All right, so right here we have that shift of structure to the downside, and price pulled back at this point. Now I'm going to the lower time frame to show you. Right now we are on the lower time frame at this point. So like I said, on the 1 hour time frame, this is that breakout structure to the upside that I showed you guys. That breakout structure to the upside. Remember, there's a shift of structure here, and this is like the continuation, all right, of the uptrend, because we are expecting price to break past this high. Like I said, until price break past this high, then we know that the market is now bullish. Then we wait for that retracement, like I showed you on the diagram. We wait for that retracement before we can trade the bullishness of the market. All right, so right here we have that break of structure again to the upside, and I knew for a fact that price is going to pull back again before the uptrend continues, or maybe price can just keep going down. Whatever price likes, it will do. All right, I just want to react to the market, not to predict the market. All right, so after price broke structure right here, remember, as price is breaking structure, we are having that higher high, higher low, higher high, higher low, higher high, higher low, and our last higher high right there. Our last higher high right here. Now you won't consider this as a higher high or this, because there is no candlestick closing above it. All right, so this is not a higher high. All right, this is just like a mini consolidation at this point. It's a mini consolidation at this point. You can even say a triple top or a double top at this point right here. So when you see something like this, most times when you see something like this, just know that price is coming to sweep liquidity above this point. When you see a triple top like this or a double top just like this, price must come sweeping liquidity above it, because there is like some stop loss at this point. So price swept liquidity right here, and I waited for that break of that shift of structure. I like calling it break of structure shift, but the main name is shift of structure or change of character or change in the state of delivery. All right, I believe you have known that, or you have understand that. All right, so right here we have that shift of structure to the downside right here. Right here we have that shift of structure to the downside and a pullback. All right, a premium and discount also. Like I said, this is just like the opposite of the other trade, the first trade. This is just like the opposite. They are almost the same thing, because this is Euro USD versus GBP USD. All right, they are almost the same thing, almost like the same thing. All right, so price put back to our premium right here. I don't know if you can see this, our premium right there. So after price put back to our premium, we had another shift of structure right here. We have a shift of structure at this point. So I know that price is about to turn bearish to facilitate the pullback before continue going up or continue going down, whatever. So I know that price is going to pull back a little bit. So after this shift of structure, I waited for this mini pullback at this point. After this mini pullback, I entered for the trade. When I saw this bearish candlesticks, all right, as you can see, you will know that the bears has entered into the market when I see these bearish candlesticks at this point. All right, so I entered for the trade right here. Right here, at least when I saw 3 candlesticks closing below each other, I entered for the trade at this point, and my stop loss was right above here, right above there, and my take profit was just at this fair value gap. All right, like I said, if you want to set your take profit, at least 50% of that fair value gap is enough. All right, price must come to that point, all right, to forward it. So right there was where I placed my take profits, and just like this, guys, played out perfectly well. So this is the trade I took yesterday, and they played out perfectly well. All right, they played out perfectly well. So I hope you have understand something from this and understand how to analyze your charts before entering for that beautiful trade. All right, you have trading rules, some rules that you jotted down. All right, go through them. You can't just write down some rules and just be trading anyhow and just be trading without looking at the rules, without looking at those guidelines. You need them, bro. You need them. You need those guidelines, all right? So you don't go beyond your limits. You know your limits, you know what you're expecting in the market. You don't trade against those rules, all right? You trade with those rules. Those are your guidelines, man. You shouldn't be trading without a guideline. You know, so that you know what you're expecting in the market and not just be trading randomly. All right, you don't trade randomly. You are going to lose. You are going to blow that account. All right, so please and please write down your trading rules. All right, write down your trading rules. You know how much you are willing to risk. You know how much you are willing to risk in a day. Write them down. So when you lose so amounts in a day, you stop trading for that day. All right, when you get stopped out so time or so amount, when you lost so amount in a particular trade, you stop trading for that day. All right, and you wait for the next day. But when you see that you are encountering some losses for like few days, then you stop trading that your live account and go down to the you go back to the demo account and just build your step back again. All right, if you see that you are encountering some losses on that live account, stop trading the live account. All right, go to the demo account and try to build your way again. When you have a good equity curve, then you can come back to the live account and start trading the live account back. All right, so that's just how you do it. You can't be losing on your real account and you still keep trading that real account. You have to go build your stamina again on the demo account. And when you see that you are now back to normal, you can go back to the live account and start trading the live accounts. All right, so I hope this helps you, and don't forget to like and share this video so that other people will see this video and gain clarity in the trading industry. All right, and happy trading day and happy trading week. All right, my god, I'm just